And so the space, as promises to be, should deliver on what should be a very interesting discussion from many angles that we should try and look at, because this has been one of the most interesting times in recent market history. But it also requires a lot of learning to reflect on past patterns, what has happened before. Uh, there's been a lot of emotion that has been, spewed by the events that have followed the report on the Adani Group, and everyone and everybody who's wanted to speak on it from every angle, whether it is political, whether it is corporate, uh, has used this moment to vent out whatever they feel, positive, negative, more negative than positive, if I simply go by the spaces that I've listened to. And therefore, what has ended up happening is that we've really not looked at the issue at its core. This is just my sense of it. I think, as market analysts and people who want to invest, we have to really think about the sentiments around an entire issue. How does the market behave when certain events happen? You have a lot of historical perspective that you can get into. Has this ever happened before? Are there other groups that have been through this in the past, and so on and so forth? There's also the angle of, should we only look at one side of the equation when we are doing a market discussion? So are we really focusing too much on one side? And so all of this kept playing on my mind. How we're going to really go about this spaces before I just keep ranting is that, let me first of all give a big thank you and huge invite to Palak Shah. Palak Shah is one of the senior editors, journalist. I know him as an investigative journalist, which is what really intrigues me. He's known for having written the book The Market Mafia. He's done the investigation into the story that led to the NSE co-location scam coming out in the open, which is still ongoing. That's the kind of depth he has. Everything that he writes may not show all the work that he really goes into, because when you're publishing something in the media, it's not just you made up a story, but you've spoken to 20 people in industry and figured out that what you're talking about is for real. So when he speaks, I listen, because there's so much more in the market that not all of us can really know. So it's not just throwing ideas in the air, but actually getting down to the actual details of what is on, and making it indisputable. So that is the respect he has, and he's going to throw light on one of his most recent reports that he's written just yesterday, on how uh, uh, I'll leave him to get into the details of that, but it's a deep dive into what's really happened behind the scenes on the entire Adani scandal. Now, after that, I also have invited SP Tulsian. Needs no introduction. Most of you have heard him. One of the early people, publishing a newsletter. Going all the way back to the 1990s, and been in the market for decades. Investment experience and investment advisor at SP Tulsian, the sptulsian.com. So that's his website and service. Of course, he's a registered investment advisor, so the insights he will bring to us on this issue, on where the group really stands at the end of this, before this, and how all this really works out. Because you have a business that is investing in infrastructure, and there's so many things to think about from different angles that may sometimes get overlooked when we are really considering what has all happened. How have we really discounted the worst, or are we really overthinking it, or is there a lot more to really come? So these are really insights that you need, because at the end we are all here for one thing only, that is to be investors, or maybe traders in the market, and be on the right side of it. So understanding what all of this means to us as investors is also key, and not getting carried away by parabola and hyperbola, which has various angles, whether it's political or otherwise, but really from a market analysis angle, what does this mean for markets, and how do we place it in the greater context of things going forward? So that has to be the real thing. Every time I post something, there are a lot of people who jump in with tangential angles. Here's a crook, here's a this, here's a that. whatever you say is fine, but it should be said in the context of what does it mean for the market and for stocks. I mean, this is not an ideological debate. I don't think I get into ideology. I'm not a philosopher. We are here to make money, and then we have to discount it in the context of the market. So I think we'll try to do that at the end of this discussion. So how I'll go about it is I will rant. Of course, I'll give my thoughts over the last 2 months of how this has unfolded. Then I will bring in Palak to give his story right from the start, how he's seen it go. SP on his thoughts, and then we'll question each other. So we'll keep it open. All three of us will question each other on whatever we say, so that adds more fuel to the fire and gets the discussion going longer. So I'm going to take down questions when the others speak. Others can do the same, and feel free to ask questions as the discussion goes along. So let me introduce the topic as I see it. Uh, the way I see it is, the markets have been doing something over the last 2 years based on lot of what has happened post pandemic, what has happened around the world. You had a great rally, and then things got a little overheated. The market started to correct. A typical bear market rallies last 1 year to 21 months, and that calculation to me from the peak of October said, okay, maybe things can be bad till October 2024 or 23, but probably not beyond that. And I started out with that initial thesis. Now, as I came into this year end, so anybody who'd think about, and even if you asked me 2 months ago, what do you think about this Adani issue? And I was still in a more bearish mindset that, well, the world is still tightening, and things are going to things can get a little worse from here if US gets into a recession. Those are overhangs and risks, which are still ahead. But when you think of all that, and then you try to draw parallels of previous bubbles, previous crashes, what has happened every time that events like this have happened, then at the end of a bear market, we've seen either some brokers go down or certain groups go down. Whether it's even if you go all the way back to 1992, you will relate with Harshad Mehta being involved with many companies, including the likes of ACC, which is still around, but at the same time with a Mazda group, which is no more there. So there's, and the same will happen if you go into 2000, and then we think of Ketan Parekh, and then we know a lot of tech companies. Some of them have disappeared, some went under, and some have survived the entire period. And so when we think of that, and then we look at, here's a company which is most overvalued than everything else, what could be wrong? And so when you're still expecting the markets to unwind on the downside, you tend to associate all the negative possibilities with it. And I would have done the same. If it's 2 months, if somebody asked me 2 months ago, I would have probably said, yeah, here's something that can go wrong. And as someone who's a technician and also looks at Elliott waves, putting it all together, I was looking for fifth waves ending, and these stocks have published wave counts on the group in November and December, saying, oh well, looks like fifth waves can complete here. And then they started to unwind from there, but actually they didn't start to unwind from there. So here's the beauty: by the end of December, a lot of what was really supposed to be a headwind started to blow over, which means you had US equities which were falling, but really were not making new lows anymore. You had a situation where inflation was starting to cool off. The markets globally started to anticipate that somewhere in the second half of the year, if we are lucky, we might even get rate cuts. And so here we are looking globally at a situation where, from the worst case scenario, things were beginning to rebound, whether for good or bad, but they are beginning to rebound. And sentiment at the end of the month was among the worst that I've really seen in years. For the US, it would be a multi-year low in sentiment, which means fear running at its highs. In India, the same was also visible, not across indicators, which is true now, but at the start of January, it was at least there in one indicator that I was following, showing extremes in sentiment. So I sort of gave up. And I said, well, if the world is turning around, then probably India also has a good chance. And here we are looking at a group which should have unwound in this 1.5 year of a bear market, but has still not done so. And so I think that was the only last shoe left hanging. And then it started. It started after the market had already dropped to 17,800, and nothing looked like happening. And then from the 21st of December, I think the Adani Enterprises stock made its all-time high and slowly started to sell off. And then we come into January. We look at the period where, and it comes as a surprise to me whether it was so specifically chosen that Adani would do its FPO right ahead of the budget. a very peculiar choice. For some reason, either they thought sentimentally it was the right time to do, or whatever else. And a week prior to all these events, in fact, when I think about it, exactly on expiry day of January, that is the 25th, because it was 26th January was a holiday. So one day earlier, exactly on the day of expiration, you have an entire month where the group stocks have been weakening. The report is released. It's released right on that day and causes probably sufficient unexpected damage to people who've been speculating in the stock. And those losses, in my understanding, would prime. And I thought at that point of time that maybe one of the reasons why the follow-up selling occurred one day after expiry, which is Friday, where a lot of stocks sold off, because typically when there are losses on the margin side, they have to be fulfilled through further selling on the cash side. So people who've made losses have to book, and usually 1 or 2 days after such events, after an expiry or after a margin call, brokers have to sell out and book for the losses that traders may have made in the F&O segment. So usually DP selling ends up happening, and so I thought maybe that's the panic. And then 3 days later you're getting the budget, and budget is typically a good turn date. Tops and bottoms have occurred on budget days previously, and so we run into the budget day, and it ends up being the most volatile session that we've really seen. What was looking like should have been a very good set of announcements for the market and resulted in a rally. We ended up seeing the market gyrating 300 points up, 300 points down, and that range is still not broken to date. We are still inside that range that was made on budget day. Though the low point has been held, we made the low point on budget day, but the markets remained within that because of the overhang, everyday news flow, again related to the Adani Group. So I think that's the overhang. It has ended up happening. It's pushed everyone to the wall in terms of sentiment. Some people are reacting, others are not. Some positively, some negatively. Some are re-looking at their investment thesis. I've heard a lot of things on both sides, but here's my simple take before I hand it over. Like I said, that a month back, say sometime in December, when I would think of it, I would say, okay, this is what all can go wrong. Probably this is where all the problems are. If the market has to still fall, it's probably got to do with this group, which is overbought, and which is not overbought, but which is over expensive, because that's how we've seen it in the past. We've seen sectors or stocks that get extremely overbought, and that's where the trouble starts. But the way the news flows have really followed, through this entire time period, the report itself, uh, we've seen. I mean, I have seen, and I'll definitely want ISP to throw light on this later on. I've seen, so many scams and scandals come out through the 1990s. From NBFC scams to fly-by-night operators, the crashes of, the TMT stocks, and so on. Wherever there's been fraud, it sort of comes out. The investigations, the stock goes under. That's normally the case. But here was a situation where a lot of circumstantial evidence, I'll call it, was used to create a case where nothing has really been found or proven to date. Of course, I can completely be made to eat my word 6 months down the line if something comes in. But as of now, what it looks like is that the case is still in the air. Okay, so nothing's been proven, but it has been marketed so well that it has hurt sentiments. The timing of it all, the budget, the expiry day, the timing of all these releases has sort of hurt sentiment so significantly that it has left everybody questioning what is really going on. And when I was in a couple of interviews, so I ended up being called in some of the news channels, and not the business ones, for the first time on a non-business channel, I think Republic TV, and they were questioning me, and I started to say, why is nobody asking about the other side of the trade? I mean, we always think about, well, if the stock is overvalued and it has been going up, it is a manipulation on the way up. But how many times do we question that this is a manipulation on the way down, and something has happened on the opposite side? And as I went around those thoughts, and I think Palak has taken that way forward, because he started to investigate the case in depth, speaking to people, getting out data in terms of what has been happening, and looking for the potential that this was a major attack on the company, and We don't know the intents yet. We'll try to find out if he has more insights on that. But what are the intents of doing something like this apart from profiting from it? Were there other angles that we can think of that existed? And because it actually led to people starting to question the country as a whole for a short period of time, which is really surprising. Now, from a market analyst point of view, when I see all of this, I look at it as how do you discount news? So I have seen news, like I said, if there's fraud, it works in a certain way. You have the case of, say, Satyam, which occurred right at the end of the bear market, January 2009. Fine, there was something wrong, but the company had a business, so the stock was removed from the index. The business was sold to Tech Mahindra, and the story moved on. So, what typically happens when we think about just news flow? When markets go through a bear phase, which is sort of what we witnessed over the last 2 years, it usually ends in the worst of sentiment, and that worst of sentiment is created by some news event flow that happens at the fag end and makes everybody believe that this is it, this is the worst. Sort of that kind of feeling can happen both at the end of a bear market or even in a correction during a bull market. For example, 2004, when the BJP lost the election and the Congress came in, I remember hitting two circuits down, the sentiment turned extremely negative. So that kind of extreme negative sentiment, where most people stop believing in the India story, is often a turning point. It's possibly the last part of panic. So this is how I see it as a market analyst. When I think about it, I see news, I see the discounting of that news, and I see, well, the market needed some last bad news maybe, and that has sort of come across, and we've taken that hit. But extrapolating that to the end of India story is the extreme, which is really 180% the opposite of that, because usually that's how it is. News is always the last thing that happens in market news flow. Things first turn bad from what looks very good. So there's no bad news, and then by the time a lot of bad news really comes together, the worst is always over, and that's why people typically find it difficult to do the exact opposite of that. So the way I look at it is that this was probably the last shoe to drop. It happened for whatever reason. We can investigate good, bad, or ugly. It doesn't have to be ugly because we don't know right now. Not every overvalued stock has really gone down to becoming a scam. That's just reality. Otherwise, Infosys would also be a scam running at 150 times P. And if I don't want to take the Infosys, so it's a very glorified name, then why don't I take the name of Z? Because Z was involved, was one of these stocks among the K10 stocks, and then it should have gone under. Sure, it got into some debt troubles 10 years later, now sold off to Sony, blah, blah, blah. But in 2002, the business did not shut down. So just because a company has been overvalued. So I made this other comparison, and on Twitter, I said, this is like Tesla. In modern day age, a company supported by government for various projects that need to be executed by somebody. So, well, Tesla is executing. And its stock is extremely overvalued to most people, even though it owns one of the widest charging networks in the US, which nobody else has. And so it does have assets which are real, but at the same time, nobody can justify the valuations, and still the stock is there, dropped 70% and has rallied from that bottom already in the last month. So, does every stock which has a high valuation really have to end in tears or in a scam, for example? Is not necessarily a case. Stocks get overvalued for various reasons. So have we really looked at every angle, or we've quickly taken reasons to believe that, yeah, this must be the one, because there's a political angle to it, to really blame everything that is wrong in our lives. So I think these are the thoughts which have flown through my mind, which is how I've looked at the market, discounting the recent events. But I'll really now hand it over to Palak, because Palak, you really need to start from the beginning on this. How you've seen it, what you've looked at, where it stands, and what's the real issue. So, welcome to this to the Spaces discussion.
Thank you, Rohit. Am I audible enough?
Yes, you're audible.
Thank you, Rohit, for that wonderful introduction and laying the background uh, for this thesis discussion that we are going to have. I think you have made quite a few fair points on valuation aspect, on the political thing, and on the market. Uh, as to what is the scenario. I don't want to build any castles in the air. When I did this story yesterday and it went viral, my phone has been buzzing for the past 12, 14 hours continuously. There are people who have been obviously trying to know more from me, trying to find out what is the kind of more data that I hold. And of course, there are market people who have been calling. Besides, there are a few people from different spheres of like who've been calling, New Delhi and other regulatory sources. And, I have also been I've got calls from people saying that, you shouldn't, write everything because there is investigation to be done, and, people are getting alert as to what angle we are probing. But truly, when I saw this kind of data, which was there, when I met a few people, met my sources, I thought it's a sensational story, and this side needs to be given to the market as to how the entire operation happened. I've been scrambling for the past few days to decode the story behind the and go behind the headlines. I have got in touch with some of the oldest brokers, who have been extremely close to Ketan Parekh, the likes of Ketan Parekh, and sort of a lot of other such traders who have been short sellers in the Indian market, who have been fund managers, uh, and who have played the markets for nearly 3, 4 decades now, and who have seen all the colors of this market. I have spoken to my oldest regulatory sources, who were part of SEBI, who are still part of SEBI, or who have moved out of SEBI, income tax. When I wrote this book, Market Mafia, I got an opportunity to meet a lot of investigators. So I've got in touch with them, try to know bits and pieces of how, this entire story played out. Because for me, 100 billion rut in a single group in India is a historic story. This is not a small story by any chances. How much did we lose in a few wars with Pakistan or China? It was not $100 billion. I mean, we faced so many terrorist attacks in our country, but the kind of money, that has gone down the drain, I mean, that's huge. So I thought the story really fascinated me, like, Market Mafia, which was the NSE high frequency trading scam. Uh, what I have observed is people are extremely quick to come to conclusion and believe what has been written by such reports as gospel. You know, I I would like to leave the valuation part to SPG, Tulsianji, because I mean, I really have followed him for many years, and I think he's the ultimate word on valuations of, matrix and all. What I have decoded by speaking to a lot of people in different segments is that, this Hindenburg has made Adani a pot boiler. But in all sense, what it has done is, it has hurt country sovereignty in a much worse manner, because the question here is not of Gautam Adani. Though people like Gautam Adani are much smaller compared to market, compared to country sovereignty, and markets are much bigger. So you investigate Gautam Adani. You don't leave a single stone unturned in investigating Gautam Adani, his companies, his links. But a look at Hindenburg will expose its dubious agenda, dirty play of short selling, and trying to distort confidence in India's market integrity and regulatory oversight by playing the game in an illegitimate manner. If it was so confident of its theory, allegations, insinuations, it should have had the guts to come and short sell an Indian company stock in India, which is the legitimate route. Why did it indulge in the illegal offshore derivative play? It's not only Hindenburg. These investigations have revealed there are a few more who have indulged in this offshore derivative play. In the own words of, so the biggest clue was given by Hindenburg. In the own words of Hindenburg, it said that it shorted the non-Indian traded derivatives of Adani. I mean, in which country is this legal? Will US allow its US listed companies to be shorted in some tax haven somewhere else? They will not do. So my strongest argument is that you investigate Adani, but more important than that is that should happen. But that more important than that is that India should not let a scoundrel like Hindenburg and the hidden shadowy figures go scot free. What they have done is to exploit a deadly weapon, that is offshore derivatives, to short sell Indian markets. This is illegal since no country's tax and security market law will permit such a dubious operation outside its jurisdiction. Is it not robbing Indian investors and manipulating the system and Indian markets from outside the country, where you know and you're confident that you will not be caught? All this when Hindenburg itself is not registered with any of the securities market regulators in the world, including the SEC in the US. There are two kinds of people who can, whose reports uh, are taken are taken seriously. One is when journalists write in the newspaper, columnists. The other is registered research analyst. You know. Now let me highlight. So if you peel the Hindenburg report, there'll be so many points which will tell you this report is completely senseless. It has been made to sensationalize, and as Rohit pointed out, it is timed. So I have, my today's story says how derivative bets were built quite ahead of Hindenburg's report being published on 24th. Actually, in the market, the report started circulating on 25th morning. But there is this investigation shows that it was put out on Bloomberg sometime on 24th of January. You know, so how did Bloomberg give such a firm a platform, and who actually put it on Bloomberg, if not Hindenburg? And that needs to be investigated. So Hindenburg itself is saying before writing this report, we created short positions. So how many people it shared the report with? Who are its analysts? There's no transparency in Hindenburg itself. So let me highlight a few points mentioned in the report, which forms the basis of the allegations. So what does the report say? It says we have identified 38 Mauritius shell entities controlled by Vinod Adani or close associates. We have identified entities that are so surreptitiously controlled by Vinod Adani in Cyprus, UAE, Singapore, Caribbean islands. Now, after making this statement, in the entire report, Hindenburg fails to give any proof. It just says that all this should be investigated. Further, it says four of Adani's listed companies are on the brink of delisting uh, threshold due to high promoter ownership. Based on this minimum 25% shareholding norms that Indian markets follow. This statement is absolutely false and completely wrong information. You check any of the company, the official holding of Adani is between 65 to 75%. Okay, can they name? They have not named which company has to be delisted. Can they name any company? Now you will say that Adani has unofficial holding. I mean, 70%, 50 to 70% of India's investments come through tax haven. Can you say that all these are close to the promoter? I mean, if you prove that, that's quite a story then. Then Hindenburg says our research indicates that offshore shell companies and funds tied to Adani Group comprise many of the largest public holders of Adani stock. So that's what it is saying. All these entities which are holding in Adani Group are all linked to not only linked, they are all owned by promoters, and that is why uh, you know this holding norm is not being followed. So it's not giving any evidence. It is not. So I think this, it is leaving on investigators to probe that. Now, Indian markets. So the other statement it makes is, so before that, I will tell you, it is talking about Cyprus. It is, Apple has structured its companies in Bahamas. There are other IT companies who have structured their companies in other tax havens just for the purpose of tax, structuring. So either you prove that they are all, rerouting black money or indulging in dubious activities just by saying that, they are there in tax haven, you're not making any point. So then Hindenburg further says that many of the supposed public funds India has. So yeah, it says that it has spoken about Adani's link to Ketan Parekh and some of his associates. Now, what it does, how does it prove the link? It says that in 2006, some email uh, written by Gautam Adani to Ketan Parekh has been highlighted. Was caught by some agencies. It goes to some other 2009 where it says, again, Ketan Parekh links had come out in some reports. So these are the kind of allegations that it is making to link this company and Adani Group with Ketan Parekh. If there are links, let the government do the probe. But what is this report? On the basis of this, I am telling you, markets cannot fall. I remember when I was working with Business Standard in 2012 or 11, there was an IB report which had come out, which said that Ketan Parekh was behind stock rigging of several companies. And now, after many years, I came to know that a few stock market brokers got in touch with a few people and got that report out, and that is how they shorted these companies. So this is the kind of dubious play that has been going on behind the scene. Now, one more point I would like to, can I say that, somebody is telling me Ketan Parekh has run away to London with millions, with battalion of lawyers, and now because somebody told me, Ketan Parekh only shorted all these Adani shares and he has made huge money. I mean, if I write that in my report, it will be laughable, you know. So, yeah, so valuation wise, I observed one more thing. It is saying that Adani Ports is valued at 300 PE, and that's why the valuation is sky high. So after being in markets for so many years, I mean, one will know that valuation of a port company and valuation of an FMCG company cannot be compared. They are using the matrix of of valuing an FMCG company for valuing a port company. In India, if you want to create one single port, it will take 15 years for you just to take several of the environmental clearances. And everybody knows this infrastructure is a heavy, investment business. The cash flow needs to be seen, and profits only start coming after several years. The very fact that these ports are there, which are real assets, shows that Hindenburg has not been able to dig out anything more than creating sensation. And why the stock markets believe? Because the stock started falling. So stocks don't fall on reports, stocks fall on positions. Position is something which has created this entire vicious cycle, and Hindenburg is being just taken as a reason for Adani stocks to fall. But as I pointed out in my story, you will see the kind of frantic food buying that has happened, and I would like SEBI to put out data when such big rot has happened in the stock markets. I would like SEBI to put out all the data of outstanding positions in the public. I think, and that's not a very hidden thing. You don't give the names, but at least you put out the outstanding positions in public for people to know these were the positions outstanding in markets in Nifty, Bank Nifty, and Adani stocks. I have showed in my article as to how the ratio of put was at last time that kind of ratio was in 2009 at the peak of financial crisis. So when the global markets are stable, when US is stable, when either US markets have rallied in the past few days, So high. I mean, what is the reason? Needs to be probed. And around one day ahead of expiry, they timed this report. They timed this entire, Adani thing ahead of this budget session, parliamentary session to start. And then Jairam Ramesh of Congress comes and gives a statement very same day, I think, or the next day that, there should be a probe and, we are ready. Everybody starts this. So I think it has also got this political angle with Rahul Gandhi for the past 6 months during his Bharat Jodo Yatra shouting that, Adani, Sarkar, Adani. So I think all this is a vicious thing and it has got some kind of, uh, you know, circle going on. So all I say is you investigate everybody, you put out the data in public domain, which is required. You don't put out the names of people who traded, but at least the outstanding position, which will, do dood ka dood and pani ka. So I think that is what is required to restore uh, the confidence of people in Indian markets. Nobody can come and short sell Indian markets outside. I mean, that destroys the confidence of retail investors in India. What are you telling retail investors that your market can be played outside? So this is the point I wanted to. This is what I found when I saw those, when I met certain officials, when I spoke to them, when they were narrating the kind of investigation they have done. And I think lots more is going to come out because after this story, these investigators are also now very guarded with their investigation because, I think they feel that one angle has been outed and people will be alert. But anyways, that's my job. I saw it was a fantastic story and it should have been written. That's why I went behind it. And for the past few days, I have been really trying to get this story out. So that's my limited point. And I think on valuations, Tulsianji can shed more light.
But Palak, so a couple of questions that arise from everything that you have said, which will probably be on everyone's mind. One of them is that, as you highlight, that Hindenburg is really not a research company, which means it is not being regulated by any U.S. Regulation. Like in India, everyone who's putting out research in terms of recommendations has to be regulated. I mean, I think there's similar laws in the US as well. But you're saying that this company operates without any regulation. Palak, are you able to hear
Yeah,
me?
yeah, I can hear you. Can you hear me?
Yes. Yeah. Yes, go on. So you think that Hindenburg is operating without any regulation?
Yeah, 1 second, 1 second. There's some. Yeah, yeah. Can Rohit? Can you repeat your question?
I said you are saying that Hindenburg is operating without being under any regulation in the United
Yeah,
States.
yeah. So investigations have revealed that they are not registered with any of the securities market regulator anywhere in the world. Who are their analysts is not known. It's just one face who has been coming, on TV and social media, not on TV, on social media, using his handle, his website. So that's the only thing that is known. And I mean, nobody, they're
But
not.
doesn't that immediately become a violation of US law? Just like in India, like you're a research analyst, you have to be registered. You can't give a recommendation or publish a report on something without
Yeah, so in
it
India,
being
that is
regulated.
quite strong. In UK also, when I spoke to people, they told me it is quite strong. I don't know about US how it takes this. So we need to see that. But what they have done is they have not published a research report on any US company and shorted them. What they have done is they published a research report on Indian company and shorted that Indian company outside India, outside the jurisdiction. So
No,
it's a clear
no,
violation of Indian laws, Indian tax laws, Indian securities laws, and maybe even more.
okay, but there is a history of Hindenburg writing about US companies. No.
There is a history of them writing because when I went on their website, I saw. But what they are doing is they are writing about US companies being in the
Hmm.
US, and those companies are being shorted in the US. Were any of those companies shorted outside US, somewhere in Singapore or somewhere in Mauritius or Cyprus? No.
So that's a clear thing that, they have violated all the Indian laws. If they were so confident, why don't you come and short the Indian company in India on the Indian exchanges? Who's stopping you? You have all the tools. You have derivatives. You have puts, calls. You have lending, borrowing
That
mechanism.
takes
Everything
me.
is
So
there.
that takes me to this. So that takes me to the second angle. So here's a company which has built short positions in one he says is in the bond market in the US, and second is through these derivatives. Uh, Most probably through some bank, because otherwise it wasn't possible to build that derivative position. Now, if it was done in India, of course, you cannot, unless you really borrowed from the NSDL, which is a very complicated process. It's not possible to really go out and short. We all know that. I've tried, way back in 2003-4, we used to try and do that in a long short fund. Very, very impossible to, very difficult, cumbersome process to borrow stock and short it unless someone tries to do that. And if you do, you would have a big borrowing figure with the NSDL available to SEBI, which they could have disclosed as you are asking for. Now, if they have not done that, and then immediately they say, okay, there's a ban on short sales, which should have led to short covering, if that was also true. So, if there's no cash market shorting, the only way that somebody can do it is through the derivatives market. Now, in India, definitely, you're also saying that they couldn't do it through P notes, which means that, but they can, an FII can short derivatives in India directly. And if some bank has given them a position, would that show up on our shores? That becomes the next question. I think Palak has lost one sec. So I'm going to add him as a speaker. Yeah. Palak, you're joined as speaker again. I don't know if you heard my question.
Uh, yeah.
Okay, so what I was saying is, you've explained on the part that here's a research company, they've created derivatives outside of India. What I was trying to ask is, what I was specifying is that, see, in India you cannot really short. I mean, you can borrow from NSDL, then that data would have shown up in the cash market. So if it's not a cash market transaction and it's a derivative market transaction, the question is, did that derivative transaction, if they built a derivative position with some external bank or broker outside of India, would it show up on our shores, and how would that happen? So that is the next question to you.
Yeah. So first of all, India is one of the world's most liquid derivatives market. You can short, and there are figures to show this, futures, options. So I think anybody can come here who's regulated, and they can play this
Long, short, whatever they feel like. So, your second question was what?
Yeah, so how does that translate into a position in India? Because finally we are seeing that they would have to short it here, cover it here, or is it that the transaction can be done outside of India and closed there itself, which I think is, I don't know if it is possible,
Wait,
because you
once
would
more,
need
please,
liquidity
please repeat once
on
more. I
sides.
think something went wrong. Please, please.
Yeah. No, I'm saying that, see, if they had, how does somebody benefit from such a transaction? Say they've done a
Yeah,
derivative structured deal outside of
yeah,
India.
yeah, I got it, I
They
got it.
need
So,
to they need to book profits and make a profit at the end of the day, which
so
means they
there are
need to close
various
for that
ways.
transaction.
There are various ways in which products can be structured. It's a very open field from what I have learned uh, by talking to all these foreign brokers and fund managers. So what they do is, supposedly, uh, I am your customer. I am your trusted customer who's been trading with you, who has an account with you for many years, who has money in the bank, who has margin, and you are supposedly Credit Suisse. So I'll come to you. I'll say, Rohit, I want to short Adani, and so can you structure the product for me? So what you will do is, so it is done through credit swaps and even other instruments. Simple thing to do is, I tell you, Rohit, I want puts of Adani, which is going short. You will say, this is the spread, this is my commission. Maybe what I have learned is that a commission is little bit higher than the usual one. So they will give you the puts. Then, because entities like say Credit Suisse or a BNP or a Citibank, they have registration. either they or their associates or their brokers, they have registration everywhere in all the markets around the world. So what they do is they if they have sold you puts worth rupees 10 crore or 100 crore, they will break this down, orders, and they will place those orders with several foreign brokers. And they will go and take that position on the Indian markets to manage certain part of that risk. Because if they have taken supposedly say 10% of the spread and commission from you, or 20%, so their risk is 80%. So that's what they will try to manage on the other exchange. Now, not necessarily they will hedge the other way. What they can do is they have sold you put, they have made the 20% or 10% or 5%, whatever in their spread. They will do the same thing. They'll buy puts in India or they will sell calls. In the case of Adani, call prices were also very high and put prices were extremely low. So there is, so now when I saw those investigation details, I saw there is lot of work which was done in out of the money puts of Adani ports. I think he showed me something like 450 put was highly active, even when the price was trading way beyond, way above 700. So, that's what they will do. So this is how this puts kept rising for the past many weeks, and the ratio reached, 0.73 and 74. So that is what happened. So otherwise,
Yeah.
somebody knew that some kind of. One more thing I have learned, which I want to reveal here, is which I have not written in my story. One more thing I've learned is these people, when they investigated, they saw that I think in 21 or 20 there was a trial balloon when this news of NSDL or SEBI banning a certain foreign entities came out that had holdings in Adani. That time also, Adani shares fell by 15-20%, and for several days they remained like that. They did not rally. So what investigators think is, they are trying to find out if these were the same players who shorted even during that time. So data is also humongous, and it takes time to decipher. So, but there, what they are suspecting is, when at that time when this news was floated, which was a false news, which SEBI came out and NSDL came out and said that there is no, this ban is not new, or we have not banned these entities today, and there are at least 9,000 entities that have been banned by NSDL, you know, that remain in ban for various purposes. Somebody has not submitted PAN, somebody has not answered their questions. So there are various such reasons why these entities have been banned. And then when that story came out on Adani, I think somewhere in 2020 or 21, the narrative was that these holding companies have been banned recently, or very close to the day when the stocks fell. And then, so that was a kind of trial balloon, which is what investigators feel, you know. So this is the kind of modus operandi they have used. But that time, so they need to check that time what were the positions in derivatives. All that we should demand is SEBI put out the open interest data, a clear open interest data of past few months in public domain. You don't give the names, you give the open interest data, people will come to know. You give what kind of activity happened in Bank Nifty out of the call options, or out of the money options. You give that data. Because the day Adani stock fell from, I think it was second of January or something, Adani stock fell from uh, uh, 2,900 to 1,900. Bank Nifty was down 1,500 points. Now, the reason they said, because there was somebody who planned this. Somebody knew that, they are saying Adani has huge. I mean, all the banks have huge exposure to Adani. On the day of the budget, when it was, when for the first time in many years, the finance minister, hiked the tax. I mean, gave some hiked the exemption limits, then rationalized the tax slabs, and even allowed P notes via Gift City. The markets were up 1,200 points. by 2 p.m. After 2 p.m., what happened after 2 p.m. and 3 up to 3:30? That markets are all down. 1200 point Sensex is closing in negative. What joy! Who shorted that day? I mean,
Yeah.
isn't that a question to be answered? Shouldn't that data be made public as to what was the built up of positions? See, when I'm talking this, today morning, since morning, I've got at least two, three calls from people, my sources, why are you revealing this? I again feel that they're going to tell me, don't reveal those angles. But I strongly feel that this data should come out in public domain about the open interest. I think that will
Yeah.
help. That will help to see the integrity of the markets. That will build confidence in the markets.
Yeah.
It's much
Now, see,
beyond Adani.
yeah. So yeah, I'll just try to explain why this is really important, and SP has been waiting for a long time. So I'm going to open the floor to you. I'm going to take your entire input on what you think has happened. Is there really a fundamental angle to this? Was something wrong, and how do you see it? I'll just add one point to Palak's entire talk, and I'll tell you what it is. People don't understand why he's raising this point of looking at open interest. It's very simple. When the ownership in the stock is very, very low, 90% of the stock is held outside of the market. Only 10% probably could have been with various shareholders in the
Not
public
even
space.
10%, less than that.
Yeah, not even 10% maybe
Yeah.
in some cases. So then it is really impossible to short unless some of the large holders really lent that stock to somebody else who would short it. The only way is where was most of the liquidity. The liquidity was in the Indian derivatives market. And so, in some way, directly or indirectly, the Indian derivatives market, where the Adani stock would be trading in millions of shares, far more than what maybe the floating, is where this entire game could have been played, and that's why it gains so much importance. So that is my take to it. SP, I would really like to now get your thoughts on it. Thanks for waiting this long, and you can unmute yourself and share your experience.
Rohit, there is one, SPG, there is only one thing that I want to. So since morning, I have got calls asking me, why didn't the media talk when the prices were running up? My simple thing is, you know, there is a clear demand and supply mismatch in Adani shares, which actually fueled this rally. If the prices were running up, it was in the legitimate market in India. You come, you short here. But when the prices fell, it was outside India, which is an illegitimate market. You did it illegitimately. You did it illegally. So the whole point of why question media did not raise questions when the prices were running up is hollow. You do it legally. Your market is a great leveler. It's brutal. It will
Yeah,
rationalize everything. That's the
yeah.
limited point. Yeah.
SP, go on. The floor is yours.
Yeah. Thank you, Rohit. Thank you, Palak. I've heard you, Palak, and nice point you have covered here, Rohit, as well as you also. Now, let me first give some whatever background, first how these things have all started. Whatever my understanding goes, that yes, our Indian markets are very robust, very transparent. In fact, we show all our minute by minute open interest position. We in fact show the call and put premiums. And in fact, this all has happened because of the OTC products, which has been structured by which are structured by the bankers abroad. In fact, you see these kind of things happening there, and this is very usual by them. Where one, or you can, if I just want to put it in an Indian language, I would say that these are the Dabba trades in the overseas market, where the OTC products are structured by one buyer and one seller. Take for instance, if Nathan Anderson of this Hindenburg wants to short Adani shares, he will go and ask for other party, other banker that do you want to go long? They both with agrees and enter into a trade. So the volume is not connected or have any reflection on the Indian market, and the kind of panic which they have created has really spoiled the sentiments here. But I think now having played, let me just come out, because since you want me to give the valuation aspect of the Adani Group stocks. Now, I feel that now the whatever negatives which wanted to get created by this Hindenburg report has all been played out. Now the things are being understood by the Indian investors here, as well as by the regulators also, that yes, the things are not seen to be allowed to be done, carried out in this way. So yes, the things are seen returning back to the normalcy now. And now I think that the valuation part is being understood by the market. Now, to give an example, on last Friday, Adani Enterprise share was lower circuit 1027. And at that time, this is just an example I'm giving you. These are just the call which we gave to our members. On the last Friday during at around 11:30, and the share Adani Enterprise share was frozen lower circuit, some 25-30% lower at 1017 rupees. We advise that you write a put of 1100 rupees for 360 rupees. At that time, it was ruling at 360, and remain prepared to take the delivery of shares, which effectively will cost you 750 rupees, because 1100 minus 360 is the effective cost by which you can acquire a share of Adani Enterprise. So my point is that yes, the valuation call, the fundamental valuation call, can really give you huge money, or huge amount, huge profits if you take a valuation call on the stock. And I think exactly now the same thing is happening in all the Adani Group stocks, in fact, more especially on 3 or 4 stocks. Let me just give you whatever recommendation I'm giving here, or whatever buy calls or whatever valuation calls I'm giving, just for an example. And the similar advice has been given to all our members, because this is a disclosure which I need to give, because I'm a registered investment advisor at sptulsian.com, and our associate company Tulsian PMS Private Limited is also SEBI registered PMS advisor, where we have been given same advice, and we have taken the similar trades which I'm advising here. So my point is that yes, you have a very good opportunity now to acquire the shares. Three companies share, main especially. One is Adani Port, second is Adani Enterprise, third is Ambuja Cement. If I come first on the Adani Port has already come out with their numbers, Q3 numbers. We have all seen the Q3 numbers of the company. Excellent numbers they have reported. No question of any kind of problem there. And in fact, the share is available at a P multiple of 20 or 21. If I take the FY24 EPS, and that's kind of valuation, because FY24 one can expect an EPS of 24 rupees for Adani Port. And if you take the debt equity ratio also in case of Adani Port, the debt equity ratio is 1:1 or maybe 0.9:1. The company has a total long-term debt of 38,000 crore, Adani Port I'm referring to, on a net worth of 44,000 crore as on 31st December 2022, as of end of Q3 I'm referring to. And in fact, if you take the call on the situation going forward, they are owning about 12 ports in India, 6 ports on the western coast, 6 ports on the eastern coast. In India, we know that they own Mundra Port, Krishnapatnam, Dighi Port, and maybe this many other ports on the Dhamra Port on the eastern port as well as on the western coast. So my point is that 24% of the port capacity of India is owned by the Adani Group, Adani Port. Recently, they've in fact in the Israel, they've recently acquired one port there. So my point is that by 2030, the company is trying to become the largest port operator in the world, with the EBITDA margin of as high as 70%, 70 to 72%. That is the target which they've given. And in fact, they've been able to achieve those targets. In fact, let me tell you, Rohit and Palak and all the viewers here, that I visited Mundra Airport 10 years back. And this was just you have to believe to see the creation which they have done. And one can understand that what kind of growth which they must have made in this last 10 years. So kudos to the Adanis, at least for Adani Port, I'm referring first to this company, for creating such a big and huge project port, which has surpassed the Kandla Airport, Kandla Seaport. So yes, the situation is going forward, because as Palak has said, or maybe I don't remember, Rohit has said that, to create one port, you need 15 years time. In fact, I've seen the progress of, because I have been tracking all these companies from the grassroots level. Pipavav Port, which was floated by Nikhil Gandhi some 20 years back. I've in fact visited the port then also about 20 years back, and it took 20 years for that one port to get developed. Similar was the case with Mundra Port, but the growth of the Adani Port or Adani Group having acquired 12 ports, as I said, 6 ports on the eastern coast, 6 ports on the western coast of India. So my point is that yes, you have huge value lying there in the Adani Port stocks going forward, and I don't think that the debt equity ratio 1:1 is in any way is seen alarming. In fact, I have been talking to the bankers, the bankers of the renowned bankers who are now on the who have been on the Reserve Bank committee and all sort of things. If they say that if for such infrastructure companies, maybe like Port or maybe like Adani Port kind of things, even if debt equity ratio is 2.5 to 1, one should not get worried, because if you take the EV to EBITDA or whatever parameters, if you go by, I don't think that should really be an alarming situation for the company. So yes, going forward, Adani Port firstly hold the high value, tremendous value for going forward for the investors, and even if they acquire now, they should be able to make good money. That's number one. Number two, come on the Ambuja Cement. Ambuja Cement was acquired by this company, this group, 6 months back from Narottam Seksarias and all these things. and they acquired at 385 rupees. And people at that time were not prepared to tender the shares. In fact, we all know that the 26% open offer got lukewarm response. Nobody tendered the share. And now the share is available below 380 rupees. 385 was the open offer price, and now share is ruling at 360, 370, 375 rupees. If you take the total capacity of ACC and Ambuja, both are much more, about 60 million ton, and the kind of capacity growth which they are going to add within the next 4 or 5 years is going to be huge, and probably they will become the number one cement company in the world. So this kind of
SP, we seem to have lost your voice. I don't know if he needs to rejoin. Palak, can you hear? I don't think I can hear
I can
SP.
hear you. I can hear you. I cannot hear SPG, but I can hear you
Right.
clearly.
So I also can't hear SP. So I think he has lost the connection. He just needs to rejoin. Maybe you can message him.
One sec. What I wanted to ask SPG is that, when they are saying that, this Adani company with 300 PE is sky high valuation built on inflated figures. In that context, I wanted to ask him, with regard to the valuation, and why even he feels if it is sky high.
Yeah.
Because see, they are using matrix of an FMCG company to value a port company. FMCG company, from day one, you have earnings coming. As a port, I think he has rejoined.
Yeah. Okay. I cannot see. SP, can you hear us? Because we were not able to hear you earlier. He's joined. Now I'll have to just invite him to speak.
Huh.
Okay. I've done that. Give it a second. Should happen. SP, I've given you a request to join. Let me send
While
it.
he joins, I'll tell you one more point in the report that I'm,
Yeah.
looking at.
Done.
They are saying out of 23 people, in the key management, Adani is having 8 people from the family. I mean, you go and check some of the largest corporate houses, how many people they have from the family. What is this point? What are they trying to say and, make of this point? Just club every red flag together and sensationalize it. That's what they're doing.
Palak,
Yeah,
Yeah, SP.
Palak SP Tulsian here. Palak SP Tulsian here. I can.
Yes,
I can
SP,
hear
go
you. I
on.
can hear
We
you.
lost you in
Secondly, I can
between.
hear you. Yeah.
Yeah, Rohit, I'm Tulsian here. I'm Tulsian here. I can.
Yes. Yes. Go on.
Now coming back on the Rohit, first on the group, if I just take the research, this report, which has been seen to be malicious, if I first go on the promoter stake, they've said that the companies are owning more than 75% stake. In fact, that's a blatant statement. That's a wrong statement. If I go by the enterprise, the promoters have 72.63% stake. In Adani Power, it is 74.97. In Port, 65.13. In Green Energy, it is 60.75. In Transmission, it is 74.19. In Total Gas, it is 37.40. In Wilmar, it is 43.97. In case of Abuja Cement, it is 63.22. In ACC, 56.69. In NDTV, it is 69.71. In fact, I've covered all the 10 companies of the Adani Group which are listed on the Indian bourses. And in fact, if you see, none of the companies are having promoter stake of more than 75%. So this report saying that the majority of the companies are owning more than 75% itself is a wrong statement. Come on the executive role of the promoters. In fact, executive role, I have not seen any group, such a diversified group where the executive roles are the executive roles are held by the promoters in the least capacity. Come on the case of this group, the least executive roles which are held by only this Adani family is only the 3 companies, that is Enterprises, Adani Port, and Adani Transmission. In fact, in all 3 companies, the Gautam Adani and Rajesh Adani are seen to be the executive directors, and because they are seen to be the large infrastructure company, that is the reason they are holding the executive role. Otherwise, in all other 7 companies, they are neither in the executive role nor even on the board of the company. Come on the non-executive, non-independent directors. In fact, they are non-executive, non-independent directors in case of maybe Adani Power, Adani Total Gas, Adani Green Energy, Adani Wilmar, and Ambuja Cements. This kind of the things are held by the Adani family. Now, if I come on the In fact, in case of the NDTV, there are no board member existing from any of the Adani family. There are no member from the Adani family seen on the board of NDTV Limited, which the company has recently acquired. If you come with the companies, which are the other companies where the professional management or professional CEOs are running the company, that is Adani Power. You have Anil Sardana of Tata Power as CEO of the company. In Adani Wilmar, you have one Mr. Mukherjee as the CEO. In case of Total Gas, again, you have non-promoter or the professional as a CEO. In case of Green Energy, again, you have a CEO. In Ambuja Cement, you have Ajay Kapoor. In case of ACC, Ajay Kapoor is the CEO. So my point is that out of 10 companies, 7 companies are run by the CEO, professional CEOs, where no Adani member of the family is seen to be in an executive role. And I don't think that you can expect any group to have these kind of professionalism or professional board of existing for such a big companies where the companies are running with a market cap or maybe asset size of more than 1 lakh crore. So these are the things. Now come on the auditors of the company, which they've raised, that the auditors are not seen to be. He has only raised on 2 or 3 names, which have. But if you go by the in Adani Port, there is single auditor, that is Big Four, that is Deloitte. He's the auditor of that company. In case of transmission, again, Deloitte are the auditor of the company. Again, Big Four firms. In case of power, again, E&Y. E&Y are the single auditors of Adani Power, Adani Ambuja Cement, ACC. That means 3 companies are just having E&Y as the auditor, as the global Big Four. 2 companies, Adani Port and Adani Transmission, are having Deloitte as the single auditor. Only 2 companies, that is Adani Total Gas and Adani Enterprise, have Shah Dandaria and Company. And mind you that both the companies, that is Total Gas, has a foreign partner. And if a foreign partner is comfortable with a company, with the auditor firm like Shah Dandaria and Company, I don't think that what's the problem with this Henderson for the report. So my point is that yes, all these issues are seen to all have no substance, no meaning, just with one intention to create the sensation and just to feed the wrong informations to the people which have been accepted by the Indian politicians here. Now, if you go by the overseas JV partners are seen comfortable with auditors like maybe Shah Dandari and Company. As I said, Total Gas is the MNC partner in Total Gas. Similarly, the Wilmar is of Singapore are the partner in AWL, and they have E&Y and the Dharmesh Parikh as the joint auditor. So again, if the MNC's partners are who are the joint promoter of the companies are comfortable, I don't know what is the problem with them of having these type of things. If you come, only 2 companies are seen to be having high debt level. That is, one is Green Energy. The company has a debt of about 42,000 crore. In Transmission, company has a debt of about 38,000 crore. So my point is that if you see these 2 companies, Green Energy and Transmission, Green Energy have already installed the project or the power capacity, generation capacity of about 14,000 megawatt. And if you take the ballpark capex of about 5 to 6 crore per megawatt, it is cost you about 75 to 80,000 crore, on which the debt is about 42,000 crore. So unless until you really take the situation, based on the capex required, or maybe based on the amount required to create that kind of capacity, you cannot take the comfortable view on these stocks. Now, 3 operational companies, that is Adani Port, as I have referred, has a debt of about 40,000 crore. Adani Power has a debt of about 38,000 crore. Adani Power has a fossil fuel power and thermal power based capacity generation of 12,000 crore. So on that, again, 38,000 crore debt is seen to be reasonable. Now, these 5 companies, they have no debt at all, or they are all cash rich. One is Ambuja Cement, ACC, Adani Wilmar, NDTV, and Total Gas. All these 5 companies have no debt at all, or either they are cash rich. So my point is that yes, the things are only seen to have been created with a view to sensationalize. Now, such type of reports maybe keep coming. In my view, what I feel that investors should take a note that the things are all seen to be, aiming towards the destabilizing the Indian economy and more to attack on the BJP government. And I think that these kind of reports will keep coming till May 2024. And in fact, this is very unfortunate that the Indian opposition parties, they are seen supporting these kind of malicious reports. And in fact, because nobody is interested that India should really progress, whether you talk of the developing countries or any countries of the world or across the world. So yes, these type of reports will keep coming in till 2024, the type of things. And I'm very much worried that probably if we keep giving credence to these type of reports, that will be really very damaging to the Indian stock market and to our Indian investor. Now come on the brainchild If I just give it, I've heard Rahul Gandhi saying that, you know, in the parliament day before, that when he was going on Bharat Jodo Yatra in Tamil Nadu and Kerala, people asked him that everywhere I'm seeing Adani, 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 road Adani, port Adani, Dukan Adani, sab Adani. And he was very much surprised. But my question was, nobody is asking, one should ask the Rahul Gandhi that if he could be able to see the Adanis only in Tamil Nadu and Kerala, but in both the states there is no what you call a BJP government is existing. In fact, in both the states, that is Tamil Nadu and Kerala, you have the anti-BJP governments. And why, if these anti-government, anti-BJP states can invite Adani, then that means the group is seen to be very progressive. In fact, same is the case with the Rajasthan government. Ashok Gehlot, about a month back, has praised the entrepreneurial ability of Gautam Adani when he was there, you know, to participate in the Rajasthan Investor Summit. Same thing is with Mamata Banerjee in West Bengal, because Gautam Adani Group is creating huge investments. So these four states are the classic example. One is Tamil Nadu, second is Kerala, third is West Bengal, and fourth is Rajasthan, where the huge investments of the Adani Group has all been appreciated. So my only worry is that if they have these, unfortunately, these all what you call opposition parties uniting with the sole objective to dislodge this BJP government, and will keep supporting with these incorrect factual reports, then that will really be very sad for our country. Coming back on the
Tulsian, on this political point, I have a point. To be very fair, see, we all can see that Adani is being favored on projects. Maybe, you know, that is our view from the outer side, but we all can see that, you know. But that has been India's history. You know, certain industrialists at some point of time have been favored by the governments. You know, you see, if Adani is being favored, we all should agree to it. We cannot say that, you know, he's not being favored. Come on, let's be fair. But so was Tata's. I mean, Tata's got Air India, right? Then this we can see what mess has been created in the telecom sector. You know, yet industrialists are being given Padma Bhushan, Padma Shri. You know, they are being given a long rope to get out of the mess. But that is how India's history has been. You know, industrialists have always been given a long rope by successive governments for the past 70 years. So, you
But
know, you
I
raise
think,
a point about that.
Palak just adding to that, whatever.
Palak, I think I will slightly disagree here with you. I agree that we should, in fact, be supportive to the government, or we should openly see that some favor has been given to Adanis. Now, I'll give an example during the UPA government. Recall, in the UPA government have floated 8 ultra mega power projects. If you all recollect, they have structured 8 ultra mega power projects. First 3 ultra mega power projects, you know, which were bid by, first went to this Lanco Group. If you recall, Madhusudan Rao. Who was he? He was the Congress MP. He resigned and became an industrialist. To first ultra mega power project was awarded to him. That is Lanco Group project, Sasan, if you recall. And the Sasan ultra mega power project was outbid. He won that project from the Tatas and maybe other established power producers. Do you mean that the favor was not given to Madhusudan Rao or Lanco Group at that time? It was given. Then, if you recall, thereafter the first 3 projects of ultra mega power, that is Sasan, Tilaiya, and Krishnapatnam. All 3 went to Anil Ambani, ADAG Group. And then fourth, because first 3 ultra mega power projects went to Anil Ambani Group, then thereafter they put a condition that not more than 3 ultra mega power projects can be given to more than one house or one promoter. And what has been the fate? We all saw the fate of the 3 ultra mega power projects. That is Tilaiya and Krishnapatnam project, ultra mega power project, had to be cancelled, UMPP. Only the Sasan has seen the light of the day. That too, it went from Lanco Group to ADAG. So my point is that yes, we have seen that thing happening in the past, but here, in case of this government, why the Adanis have got all these airports and all these roads and all these bridges and this one? Because they've proved their performance. In fact, I would say that they have been in the existence for the last 20 years. They have not done all these projects in last 6 or 7 or 8 years. They have been in the projects in this field for the last 20 years, and they have been awarded many projects by Rajiv Gandhi, many projects by Narasimha Rao, many projects by the previous government. governments. So my point is that no, I don't think that the things are correct to say. In fact, you could say that the result oriented or the capable persons, those who have the execution capability, those who have the quality, and then those who have the time completion capability are given these projects. Take the case of Bombay Airport, Mumbai Airport. In fact, if you see this Priyanka Gandhi said that they've taken 100% media from in their control. That is wrong statement. In fact, all these independent media agencies are still existing. That is India TV or maybe that Republic TV and all sort of things. And if the NDTV has been acquired by this Adani Group, they paid hefty price. They paid 350 rupees per share to Pranay Roy and Radhika Roy. And what went wrong? In fact, all these media guys, they want the companies to be to fund this fund to come to fund to them free of cost. What has happened? In fact, Pranay Roy borrowed the money from Reliance Group some 10 years back by giving them the convertible bonds, and when the bonds were exercised, he became uncomfortable. He started fighting the legal cases with Adani, because Adani bought the stake from Reliance Group and then acquired the company, that is NTTV, and he acquired the company effectively at a price per share of 350 rupees. Now the share price is ruling at 200. So I don't think that it is wrong to say, oh, they've snatched all the projects and all these things. Similar is the case with Mambuja Cement. They acquired the share at 385 rupees per share from Narottam Seksaria. And he's a pakka businessman. He will not give anything free of cost. So there has been no government involved in these transactions. So I think this is wrong to say that all the favor has been done by the government to give the projects to Adani. In fact, I would say that the Adani's got the projects because of their standing, because of their execution capability, because of their timely performance. What has been the case with the FMCG product? In fact, today Adani Wilmar has the higher turnover than the HUL. They have a top line of 2,60,000 crore per year. And on one hand, we with the startup companies, we just chase the top line and give the valuation. But in case of Adani Wilmar, we don't give that kind of valuation, which has a higher top line than the HUL. So my point is that whatever you cannot capture the FMCG market, one can capture the bridges, one can capture the airport. But if they have the FMCG market, that is edible oil, attas, besan, and all household products to the extent of 30% market share, 15% market share, it cannot just be bought by the government favor and all sort of things. So my point is that in case of Adani Port, in case of Adani Wilmar, in case of Adani Green Energy, these are all the creation and execution capability of the Adani Group, which has got them all these projects and all these things. So that's my point. Yeah.
Yeah.
Yeah, in
Tulsianji,
fact,
so what
Palak, in
I
every emerging market, what we have seen is some of the large businesses have been closely involved with the government in execution of projects, because most of them need things like infrastructure and other things built. It's unfortunate that we have to give a political angle. There may be some angle. It's not that there isn't, but to say that it's all and in the end, I mean, our discussion, all three of us, we are really people related with the markets, and in the end, I think we want to know whether the markets are done doing what they had to do, which means, one, is this story completely discounted? It was interesting to see the valuation angle. Palak, earlier you had a question on Adani Enterprises valuation side for SP. So maybe we can come back to looking at that as well.
No, so point is that this politics and mixing with business, the drama of absurd. It is there for centuries. It is going to go on. But what my point was that I peel the report. If you peel the report layers upon layers, I mean you will come to know that 80% of what it writes is just absurd. It is picking up bits and pieces from here and there, trying to, whatever red flags, whatever is being reported in media, it is just collecting those. And I recounted all those things in the beginning of our discussion when I said, and it is using that report to create that sensation. And then behind that report, these positions which are there, which were built surreptitiously, illegally outside India. I mean, those positions are the real culprit for such a market fall. Reports, we have seen several reports coming. Veritas reports, I'll tell you, Veritas wrote those reports about several companies. Veritas reports were much better than this report. I have seen Veritas. I've gone through, I used to fight with editors to publish those reports that time. I mean, those reports were much better. They were on the line of forensic audits. And this report is just a piece of sensation using all the media articles here and there, insinuations. wild allegations saying that, everything is built in tax havens. You prove it. That's fine. You give, at least, even if you don't prove it, you give a proper trail to it. You back it with evidence. My book, when I wrote it, I took 2 years to just sit with that research. Even though I had tons of data and the forensic reports, I sat there, trying to link where all this is going. And, then I could bring out that story from those forensic reports, from the admission of all these people who were interrogated by SEBI. So you do that they have not done. They are saying, they are linked with Ketan Parekh, but you show where Ketan Parekh is coming. I mean, everybody knows. I mean, a lot of people will say that Ketan Parekh is playing the market, but how? Where? At least you give some idea. At least you give that modus operandi of what he's doing and what not. And modus operandi, that too, a very logical modus operandi. This is not the way. So I think while politics is a drama of absurd, it will go on. Elections are coming, but I think this needs to be investigated. The short selling that has happened outside India. If you say that the stocks were overvalued, yes, they were overvalued they could be overvalued in certain aspects. But then you come and short it in India. Now, why are you creating this illegal structure and shorting those stocks outside? You're destroying the integrity of Indian markets. Will any other country allow to destroy? Will any other country allow their markets to be destroyed in this manner? What does it prove? It is showing that Indian markets are so fragile, Indian regulation, Indian government is so fragile. You can do anything. This is criminal. This is like waging a war. As I told you, no terrorist attack on the country has, made us lose so much money that we have lost in the stock markets because of this kind of an illegal operation. I think we should take it seriously. There is a need to investigate this thoroughly. You investigate Adani, you investigate this. This is bigger because Adani is far smaller than the integrity of stock markets, than the trust of the retail investors that they have built, on the markets. So I
Yeah.
think that angle needs to be probed, and
In
that is
fact, Palak,
where SEBI should put
is
out the data.
Palak,
Palak and Rohit, I just want to add here one point. In fact, there is a say that हम आह भी बढ़ते हैं तो हो जाते हैं बदनाम, वो कत्ल भी करते हैं तो चर्चे नहीं होते. Now, let me just give you an example here of Adani Group. We all know that of the 10 Adani Group companies, 3 have been acquired by them recently. That is Ambuja Cement, NDTV, and ACC. If you take the case of 7 listed companies, 3 companies have been hyped off from Adani Enterprises Limited. That is Adani Green Energy, Adani Transmission, and Adani Power. Adani, third one is third. Do you know that how the hyping off had been done? First time in the history, in fact, I've been tracking this capital market for all the companies' valuation and all sort of things. For the first time, I've seen such an honest restructuring move having initiated by a group where the similar set of mirror image shareholding pattern have been made. That means in Adani Enterprises, when they hyped off Adani Green Energy, 75% of the shares were kept by the promoters, 25% were given by the Adani Enterprises to the same set of shareholders. That's the reason. In fact, none of the companies are having more than 75% promoter holding. Now, do you see the similar kind of pattern existing in case of other companies? No. In fact, everywhere they keep the control of the holding companies with them. Take the case of Grasim. Grasim is holding 65% stake of Adani, of Ultratech Cement, and in fact I tell you, they ruined the valuation of Grasim and also Grasim Industries also, as well as Ultratech also. Take the case of Godrej Industries. Godrej Industries is holding the stake of Godrej Properties and Godrej Consumer, both the companies. Similarly, Bombay Burma is holding stake of the Britannia Industries. Similarly, Reliance Industries is holding the stake of Reliance Jio and Reliance Retail. In fact, I would say that these are all the most unfriendly move of all these houses. But for the first time, deviating from all the set practice of holding the stake of the subsidiaries with the holding company in one go, first time Adani Group have distributed that to the same set of shareholders. That should really get lauded, and that should really get appreciated by the public. But nobody has really done that. And in fact, I would say that that's the reason of such a fast appreciation of the share prices of all these companies. Whether take the case of Adani Power, Adani Transmission, Adani Green Energy, or maybe Adani Enterprise. Come on the Adani Enterprise share. Adani Enterprise has been the incubator company of the group, and that they have been clearly saying for the last maybe 2 decades or maybe last 1 decade or so, that this is the company, this is the company which in fact find out the mature the project and then transfer the company to a new company. In fact, that's what they've hinted for Adani Wilmar, that in next couple of years, next 2 to 3 years, they will be hiving off this company also on the similar lines as they've done in the past for Adani Green Energy, Adani Wilmar, and Adani this one. So my point is that yes, the kind of investor-friendly approach which Adanis have seen, or the transparency which they have seen, now come on the debt part. People are talking that I don't think that group debt is more than 1.5 lakh crore, 1,50,000 crore. Take the case of Reliance Industries. I'm not trying to pass any strictures against the Reliance Industries, but Reliance Industries, being a manufacturing company, has a debt of 3,03,000 crore. 3,03,000 crore as on 31st December, as per their published reports.